it's important if you use words that they have some meaning. And accommodative in this sense meant helpful, that the policy was helpful to the economy. The fact that you take helpful out doesn't mean it's harmful. It just means it goes back to neutral. So what they've done is pretty much pulled the Goldilocks on us and said, it's not too hot, it's not too cold, it's just about right. And that's where we're going to keep our policy. And that's why you saw the market think it through and then reacted by pulling back late in the day. It was also helped by some market on close selling.
As far as the future path for interest rates, has anything changed in investors' view?
Well, I think, first of all, you heard from Powell what many people in the Fed have been saying is that the dot plots, the future outlook from the Fed, is virtually useless because they want to be responsive to whatever economic incoming data they get. So I think you're going to see people move further and further away from the celebrated dot plots and stay closer here.
Left side of your screen there is Christine Blasey Ford, as you know by now, a professor of psychology at Palo Alto University, alleges that Brett Kavanaugh assaulted her when they were teenagers about 36 years ago. As that testimony is going to draw a lot of attention. We'll try to keep our eye on the markets, though, in the meantime, and as we said, bring you updates as we see fit. Powell made some comments about political pressure, and then hours later, the president comes out and says, I'm not happy about these rate hikes. What matters on that front?
Well, I think Powell's going to be right, unless let's not forget the president has made several appointments here. And he had every capability of appointing absolute doves if he needed them. I think he got advice from somewhere else. He put some of the new people have a practice background in bank safety and a variety of other things, and they're not particularly dovish. So I think he's going to have it both ways. He's going to announce that he's not happy with the rate hikes, but continually cite the strength in the economy as the reason behind them. So you take a bow on one side, then you get cautionary on the other.
In terms of the move in the 10-year, Art, the fact that we haven't really broken above 310 now in any meaningful way, which levels are you watching as we all wonder if rates continue to climb, whether that could be a headwind for stocks?
It could well be, but again, they don't tend to shoot up like a rocket. They got up around 311. If they broke up through that, everybody would then begin to focus on 3 1/4. That's kind of a key area. At 3 1/4 and above, it might begin to have a negative impact on stocks. But so far, I think it's grounded in things like moving averages and whatever, and that's kept it contained. I wrote in my morning comments this morning, I cited Barry Habib, who's had an outstanding record as a mortgage and interest rate follower, and he thinks you might stay around here for a little bit now.